Hey, Steve, Jamie, what's going on?
Hey Scott, hey Steve, what's happening over there?
Hello.
Well, what a day we had today. Welcome everybody to the first office hours of August. Today is August 5th. I'm your host, Jamie. I got my trusty wingman, Steve Gomez, in here as well. So moving right along here, thanks everybody for popping in. We know your time is valuable. So before we get going here, just want to take a moment for the disclaimer, let everyone in attendance know that all the information that we share today with you in this webinar or any of the other 8 webinars a week we have coming at you is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker or somebody like that that can legally dispense, buy and sell information to you. So once again, everything we share in our webinars is for educational purposes only. I think that'll make the lawyers happy. In addition to these 5 p.m. Eastern webinars, well, number one, got a little ahead of myself talking about TI University there. But as far as the 5 p.m. Eastern webinars, they're all laid out right here for you, all right? You got myself and Steve on Monday. You got Trade of the Week, Steve taking the helm tomorrow for Trade of the Week, and Andy Linloff rides shotgun with him. Wednesday rolls around, we got Dan Merkin, the CEO and founder of TI, stepping up to the microphone along with our Chief Technical Officer, Brad Williams, always entertaining, so check those guys out on Wednesdays. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I ride shotgun with him. But didn't mean to skip right over Barry over here with the Trading Room, but a very crucial part of our infrastructure is the Trading Room, hosted by Mr. Barry Anderson. Just got a facelift not too long ago, some new software, makes everything smoother and easier. Everybody's very happy with it. So if you'd like to immerse yourself in a community of 4 or 5, sometimes 600 traders, then you can do so in the Trading Room. It's a great place to learn, even if you're a seasoned vet or someone who's just now beginning to dabble into the markets. Barry does a fantastic job not only at showcasing the way he uses the TI Tech to make his trades, but he does it in a real-time environment, all right? So one of the best things about the Trading Room, other than Barry, is the price, which is free, right? And if you shopped around, you know that most trading rooms out there that are worth anything are not free, but actually quite pricey. So if you haven't taken advantage of that, you haven't gotten into the Trading Room yet, would highly recommend it. Now, moving right along, the other webinars that we have for you, these all begin at 12 p.m. Eastern, Monday through Thursday. We got Beginner 101 on Monday, 201 Tuesdays, 301 Wednesdays, and 401 on Thursdays. Now, we do recommend that you take these in order because what you learn in 101, you'll need to build on 201, so forth and so on. So these are Monday through Thursday. Of course, live attendance is always the best, so you can get questions answered if you do have them. But if you've got some scheduling conflict or you can't do it, can't watch them live because you're at work, fear not, because we have all of these recorded on our YouTube channel. Since all the information in these courses is static, it's always the same. If you can't make the live version, the next best thing is to watch the recorded versions and then get back to us with any questions that you might have. So between the office hours, Trade of the Week, the Wednesday and Thursday 5 p.m. Eastern webinars, these 4, and then we have our Friday support session, which is on Fridays starting at 11 a.m. Eastern, always growing in attendees. So we typically allocate anywhere between 2 and 3 hours for that, and that's anything TI related. Nothing is off topic there. So Friday support session, don't forget about that one as well. All right, always like to show everybody you know, what's been happening at Trade Ideas since we introduced some of the scene. Shortly thereafter, we added Holly 2.0, Holly Neo, 3 different modules, all contributing to the same AI, I guess, selection of trades. In any case, you can see from this bar graph here that the response has been good. Accounts have been growing ever since we introduced the AI. So if you haven't checked out the AI, you might want to do that as well. In addition to that, this is not AI chart anymore. This is Brokerage Plus. Now, Brokerage Plus is our add-on that you can use if you're trading with Interactive Brokers. You can connect it right up and use our interface to trade, whether that be manually, or you also have the ability to take the strategies that you've fabricated through our backtester. If you choose to automate those, you can do so within Brokerage Plus. You can also automate Holly strategies using Brokerage Plus as well. So it's a very intuitive platform. Big buy, big sell buttons, reverse, flatten, all the good stuff is right there at your fingertips. So as you can see from this chart as well, the blue bars are the live orders and the orange bars are the demo orders filled, and that just keeps going up each and every month. So that tells us that yes, people are digging it, as we ourselves are all using it to trade as well. So if you haven't used Brokerage Plus yet and you're trading through IB, by all means, give it a shot. I think you will like what you find. All right, ladies and gentlemen, so I don't have to tell anybody that was sitting in front of the screens how the day turned out. Kind of probably everybody was just sitting there with a little open mouth gape as we just kept going down, down, down. So, Steve, if you're ready, buddy, I guess it's time to take a look at those charts.
Sure.
And
kind of,
yeah, see what's happening there. So here comes the baton.
All right, good thing.
And you are it.
I am. All right, guys, welcome to my desktop. So as usual, I'm going to go over a few items here. Market related, market recap, and what I've done is queued it up because last week spiders look like this. Some of you are probably saying, what the heck are we looking at? This is not what the market looks like. But a week ago, last Monday, 5:09 Eastern, this is what we were talking about. And I said emphatically, there's no bear case to be made. And there wasn't. And I said, the only one thing I want to keep an eye on are these moving averages, but most importantly, this orange line here. Remember, this orange line is a pivot line, and it's essentially representing the prior highs earlier, a few months earlier. And so that line moves forward into space, and we trade around that line, and right here it became beautiful support a couple days. And then a higher low was built, everything was quiet and everything was nice, but I said we don't want to see anything close below this line. That is where things are going to start to get nasty. So as we go forward here, we'll just move forward. There was Tuesday. Okay, no bear case, everything's holding that moving average, very good. Okay, now we had our attention here. This looks like an outside day, just barely. And in that outside day, we also had a giant, I had to throw something at the cat, had a giant bounce off of roughly that pivot line. Okay, so Monday, Tuesday, Wednesday got our attention for sure. And for the most part, the bottoming out of the bottoming tail flirted with this area, but the price action recovered with really good volume for the day, the volatility that was there. Fast forward to Thursday. Okay, big volatility bar here. Price traded as high as this level up here during the day and then closed just off lows, but the closing price was at our magic number. So now we really have the attention of the bears and the attention of the bulls equally. They should be paying close attention to this. Well, Friday is when we lost it. I said, if we close below this line, that's not going to be good. It's not going to be good. And I'll talk about the trade of the week tomorrow. And in the trade of the week, I mentioned the market is really going to dictate what's going to happen. We had a lot of things bouncing. I mean, this thing was, or I don't have the scan up, I'm sorry, but to pull back to the 50, which is essentially what the market did on Friday, the pull back to the 50 and had a nice bottoming tail, and everything kind of settled out at the 50. So in a nice semblance of price action, this was a beautiful pullback and could have very well been something to buy. But you'll see, or we'll talk about tomorrow again in the content of the Trade of the Week email, the big caveat was, let's let the market determine whether or not these are going to be good scans to set up and buy. So we fast forward to today, and again, remember, we didn't want to lose a closing candle under that important pivot level, and there it is. There is today a gap down and then trading a lot lower. So, the only thing we really have to look at is, well, there's our 200-day. The bounce occurred down here. If we look left at these areas, you know, a bit of a respite, I guess we could call that bottoming tail. But the point is how things can go from okay to bad pretty quickly. But as I went through day by day there, I lost my there we go. I mean, as I went through day by day, this was a shot across the bow, another shot across the bow, and then you really got to rethink, you know, what's happening here, in my opinion, because remember, we discussed over and over, we don't want to see a close below this very important pivot level. We got to close below that, and then of course, you never know what's going to come out of left field. Yeah, we had the weekend devaluation, currency stuff going on with China dollar, and we woke up to this today. So the only other thing I can say is in the old trader's axiom, you know, Mondays are typically the bad crash days. It's carryover from bad Fridays through the weekend. And they have this thing called Turnaround Tuesday. So let's hope for Turnaround Tuesday tomorrow if you're bullish and you're holding on and you're trying to get things, or maybe you nibbled on a few things today near the close. Let's take a look here. We'll go in after hours. Yeah, there's not much happening after hours. There's a bit of a green bump, but prices are slowly deteriorating. So with that, we'll move on, you know, to the Qs and see how they look. Actually, I'll stop on the diamonds because they look really interesting. The Dow has always looked very poised, and even in the sell-off, it found a way to be poised in the sell-off. And what I mean by that is it bounced right on cue there at its 200-day moving average. So it gave us something to look at, but we can't ignore that when we're talking about this. The volume is just, this was our quiet summer months we were talking about back here. Then all of a sudden we get a little bit of volatility out of left field, and we can double or triple those volume values very quickly. But what I mean by a pretty chart is reason. There was reason for where the Dow bounced it there, that 200-day, whereas I could not find reason in the S&P 500. There's still some space happening down there between the 200-day and today's price close. Let's take a look at the NASDAQ. Also not really making a whole lot of sense. When we look left over here, there was a bit of a kind of a bottoming shoulder right there we could look at and even draw a line, but that line still is below today's lows and still well above, you know, the possibility of a test of the 200-day, kind of like we had in the Dow today. So we're kind of in no man's land. And before I move on, if you're trading this stuff, this is like Big Wednesday for surfers. I mean, this is a storm, North Shore, Oahu coming in, you know, 25, 30-foot sets if you're a surfer. And you got to be really careful. And the other thing you can really do in these types of backdrop environments is to downsize. You know, if you're trading your favorite stocks and a handful of your stocks out there, and you're normally trading 500 shares of stock XYZ, well, you should probably be doing maybe 200 or 250, at the most 300 of those same stocks today, because as you can see across the board, just pick your charts out there, the volume candles are going to be very volatile. So the only way you can still participate is to don't get stubborn and trade half size of what you normally trade, because things can really move out there in this type of volatile environment. And I wouldn't be surprised if we see some sort of a gap in either direction tomorrow. I'm not going to try and predict, but the only thing that really made sense was where the Dow bounced today. What is doing well? Treasuries. There's a flight to quality. Look at that. Treasury ETF is the exact inverse, kind of what we've seen. Big volume running to fixed income for safety and non-volatility. The gold market, of course, continues to move. We talked about the gold market a lot. It's also very defensive, but gaps a lot because of the overnight futures. But the GDX in itself moving higher. Silver also playing along as well. But other than that, I'll probably go through the sectors tomorrow. We'll see where the data points wind up tomorrow. This is a pretty volatile day and a volatile candle. We'll see where the prices settle tomorrow. And tomorrow we'll go through a lot of these sector scans that I like to look at, and maybe see if there's any hints in here of you know, certain cues of certain things that might be trying to hold up better than others. Maybe we'll find some tomorrow. That's all I really have for today, Jane. Careful out there.
Back here. All right, ladies and gents. So, yeah, after those, you know, prior red days and closing as of Friday, and then the additional news that we had seeping out over the weekend with China, blah, blah, blah. Well, we had that significant gap down. Of course, you know, you might hear Steve and Andy and Sean and myself are always complaining about the gaps because, well, It takes the steam or, the potential energy, closed here, gap down to here. Still got some nice action, but when this is all taken out of play, yeah, not so good. But that's the nature of the markets. So, of course, when if you're like me and everybody else, let me just get to a tighter time or smaller time, larger time frame, I should say. Get rid of this post market here. Okay. So here we have the gap. All right. But now we're looking at 15-minute candles. And, when we're gapping down this much, everybody's like, oh, well, man, that's a big gap. Are we going to reverse or whatever? Well, one of the things that can help us figure that out is the good old compare count window. And boy, after the first 15 minutes today, we sure did have a bearish count, 67%. Here's the screenshot that I tweeted out for today, 67% after this not so big 15-minute candle. So yes, big gap, but still a lot of selling in that first 15 minutes. When you're talking about the big cap boys, anything over a $4 billion market cap, that accelerated selling. And, if this wasn't a good tell today, I don't really know what is, because as soon as this candle closes, we get these readings. That's a pretty significant bearish count. Whether it's bullish or bearish, anything over 55% is when I really start paying attention that this thing could act as a, a little bit of a leading indicator. Today was a perfect example of that. So after this first 15-minute candle, what do we just had a slow grind down, a little respite here, a little gasp up for breath, and then just for the rest of the day, down, 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 dive, dive, dive. Of course, what do we notice here about just the SPY in general? That 10-period fast line, boy, keeping it tapped down all day. Never really made a good run through it. Tried a little bit at the close. Of course, this is the last 30 minutes of the day. Still have all the overnight stuff to get over to see what we're going to do tomorrow. But as far as the compare count window doing its job, giving us a peek into what might occur, really good call from those metrics this morning. Now, having said that, all right, trading is never easy. And then on a day like today, boy, that's even more amplified. So let's go ahead and take a look at how Holly performed today, which very low trade count, only 6 trades if we count them up over here, 3 from 1.0, 1 from 2.0, and 2 from NEO. So a very low trade count, taking into consideration what's been going on in the markets for the past 4 days. And then with the additional gap down today, not a big surprise, because Holly being a statistical model, building day after day of, consistent data here, systems of this nature typically do better when we're having what we could call normal price action. And of course, the past 4 days, what is Holly telling us by only making 6 trades? It's just that statistical viability for alpha is not near as plentiful as it is in these conditions compared to the conditions before the craziness started to occur here. Yeah, Mike, I'll fold that in here to the topic here. So real quick here, good time to insert this, Mike. Holly, the very first module that we brought out was in 2016. That was the Holly 1.0. Now we've added Holly 2.0 and Holly Neo in the interim. And the differences between the 3, other than Holly Grail being the very first one we developed, she uses all of the, what I like to call off-the-shelf filters and alerts. And of course, the alert windows are the only thing that Holly is using. So if I just remove my small borders, you can see A windows, strategy windows, alert windows, right? So Holly 1.0, by right-clicking and configure, she uses all of the stuff that everybody else has access to. All of the stock filters, all the alerts, all the filters that come resident in TI Pro. Now, within TI Pro, you do have the ability to use our custom formula editor, right? And create different filters, or take filters and multiply them together, add them, divide them. You can create custom filters, right? So Holly 2.0, we've given her the ability to use custom filters, all right? So that is the big difference between Holly Grail and 2.0. Then when we get to Neo, NEO can also make use of custom filters and is also the more aggressive of the trio. So you'll see Holly NEO posting larger gains depending on the market, and you'll also see NEO posting larger losses. So in a nutshell, Holly Grail, very first one that we came up with, uses all of the off-the-shelf filters and alerts within TI Pro. Holly 2.0 can make use of custom filters, and then NEO can make use of custom filters and is the more aggressive of the trio. So I hope that makes sense. Over the past couple of releases, what we've been trying to get back to is, instead of people watching 3 different AI modules, which is what you had to do before we implemented this latest functionality. And when I'm talking about that, if I right click here and I come down to segments, you can see I'm showing all segments within the same trade blotter. Now I could isolate them if I only wanted to view Holly Grail's blotter or 2.0 or NEO, but it just makes it easier if you can view the whole blotter. And of course, you can see which segment is generating the trade. Just makes it a lot easier to keep up with. Same way with the strategies panel down here. We can view each individual segment, or we can work in the all capacity, which is what I have it on in this layout that you're seeing. All right, well, I guess somebody was talking about no audio. Log out, log back in. Hopefully that'll fix it. Good luck with that. So moving right along here. Obviously, Holly did not knock it out of the park today. I know that this module was up significantly more during the middle of the day, but hey, this is how it ended on 3 trades, barely up $23, assuming you were trading 100 shares, and that's what these values reflect. If you were making 100 share trades of each and every trade, this is what you would be up or down. Now that does not include commissions or slippage either, so keep that in mind. These are just gross totals. So, you know, not a very long blotter to take a look at here today, but as far as Holly's bias today, she had a short bias. You know, we had 6 trades, 1, 2, 3, 4 of those were shorts and 2 longs. Obviously the longs didn't perform very well, no big shocker there. And what I typically like to do, even though we have only 2 examples to look at today, is talk about capturing some spread between what we call risk off and risk on. And, you know, for the newer people like Mike who might be seeing the AI for the first time, just a quick synopsis of what the difference between risk off and risk on is. Risk off, you can see I can sort by both columns here. So we have risk off profit, we have risk on, right? So risk off is simply Holly obeying her rule set like me, you, or any other sane trader would do. We place a trade, we have a stop loss. If that gets hit, we're out. That's what we're willing to lose. Maybe we have a timed hold in there or a profit target as well, but the bottom line is we stick to our rules, and that's what risk off for Holly is doing. Risk on is simply showing you how the trade would have fared had you ignored Holly's exit criteria and stayed in the trade. So typically I like to point out the difference between risk off and risk on, which we have 2 examples today in WWE as a short and ALSN, on how you can attempt to capture some of this spread. So taking a look at the first one here, WWE, World Wrestling Federation. I still get a chuckle every time I see this symbol. It's just kind of crazy that they're even public in the first place. But hey, wrestling. In any case, we can see the entry right here. Holly calls the short at 66.87. Kind of just goes sideways for a good while there. Now, why did Holly get out, and why did Holly only make 11 cents here when I see risk on is showing 65 cents? Well, this typically right here, I would, if I just looked at the chart without seeing the exit reason, I might have thought that it was a reduced risk exit or a profit save exit in this case, and she did make 11 cents in risk off mode. But in this case, she made it the duration. Trend play short, if we look at the trend play short here, we can see that that is designed around a 30-minute hold time, all right? So not including the entry bar, we got 15, we got 30, boom. She does what she's programmed to do there and closes the trade out, right? Makes 11 cents. Now, when that happens, you get a little beep and a flash over here. You can see the AI is closing the trade out. So you can make the decision to go risk on. You're like, okay, see the AI's exiting. I think the trade is still good. I want to give it a little bit more time here. And you can see here, had we ignored Holly's exit signal, which corresponds with the shaded area here, we could have stayed in the trade, sticking to our hard stop as it ebbs and flows around that entry signal there. Profitable, back out of the money a little bit before finally, towards the end of the day here, releasing, getting below that low and ended up doing pretty good here. This might seem a little confusing in the beginning, which is why I always recommend, if you're trying to get used to this methodology, maybe you do a little bit of half and half. Maybe if you're short 100 shares with Holly here and you see her exiting, you book half of it with Holly and risk off, stick to your hard stop in this case, and try to get more out of the second lot. In this case, it would have paid off. A lot of the times, typically, you know, when we have a more trending day, you might be able to get out for a profit on your first lot and revert the second lot back to a break-even status. So if it doesn't work, you don't lose money on that lot, and you lock in the profit on the first one. Of course, you never really had the opportunity on this one, as it was just kind of ebbing and flowing around the actual entry line there. Now, the second one that we have here, a little bit different, ALSN, short play right here at 43.33. And this is typically what I was referring to earlier, when we see something go a little sideways, or in essence, not going the direction that it's supposed to. Now keep in mind, the stop loss is way up here. Holly calls the short here. We are, you know, once again, ebbing and flowing around that entry line. Take a little jump up here before capitulating back down to there, and then after that, it was just kind of off to the races here. So Holly got a little nervous in this one, as it wasn't doing what it was supposed to. She called one of her audibles, and by the way, 5 reasons why Holly can close a trade out: timed exit, profit target, stop loss, and then the 2 audibles that she can call are the profit save and reduce risk. So she reduced her risk on this one, took a 14-cent loser. Once again, keep in mind, way far away from that stop. So we could have exercised risk on with Holly here, said, you know what, I'm giving this one a little bit more time. And then shortly after, about 30 minutes after, you know, we're popping this little range, not quite back down to new lows because of that wide range wick right there. But trade ended up heading in the right direction. Once again, when it did take this little gyration up, notice what it bumped its head into here, the 10-period fast line SMA, once again, acting as the basically force field, keeping that little guy down today. A lot of the times on the upside, it's acting as the anti-gravity mechanism, but on the downside, it's like a force field. Came up here, bumped its head, forces it back down. So those are the 2 risk-on opportunities today. So what do we have here? Like a 66-cent spread between -14 and 52, and about a 54-cent spread in here. So it doesn't matter if you capture an extra dime, nickel, quarter. Over time, these little increments, if you can get used to identifying what might continue to work when Holly's making her official exit call, it can really stack up. Other than these 2, not a whole lot to talk about here. You know, the longs were failing, no big surprise there. And even sometimes in a market like we had today, a short doesn't work. You know, BGS, short sell here, wasn't having any of it, quickly stopped out before coming all the way back down and eventually becoming profitable. I think everybody's had a taste of this at some point in the past, whether it's a manual trade or an auto trade. Just simply didn't work, even though the undertow of the market was red most of the day. As with any market, a lot of the time stocks are strong and down markets, and vice versa. So just not a whole lot to talk about with Holly today, but a couple of decent risk-on examples here coming out of World Wrestling and ALSN today. Okay, looks like you're doing a pretty good job keeping the questions at bay there, Steve. If I need to chime in on the AI before cruising on to the next topic here. Okay, I think we're caught up over there. All right, so we've got additional Holly content today because, as you probably know, myself, Steve, Andy, Sean, Barry, not only do we, conduct these webinars, but we also trade the markets as well. And one of the features that's coming down the pipeline, hopefully sooner than later, number one, we have paper trading coming out, but number two, we are going to be folding in tracking of longer term plays, in essence, being able to track swing trades for Holly moving forward, because everybody knows that's familiar with the tech right now, Holly is just basically an intraday trader. All these trades are going to disappear. She's going to start with a blank slate tomorrow, and we'll see what happens, right? So in the future, when that piece of tech gets done, there'll be a swing trade version of Holly so that she'll continue to track plays from yesterday, the day before. It'll be user configurable, so forth and so on. So in the meantime, Barry, and this was probably, I don't know, pushing 3 weeks ago, came up with an idea, and we all started observing it, and it seems to be working pretty well, and that's what I'm going to discuss with you guys today, the methodology on how to start doing that yourself. And of course, you know, having the market start to do, well, having the market engage in this type of activity, you know, kind of throws a lot of things off, but hey, this isn't going to last forever. And even today, one of the long plays that came out worked for a while, which was still kind of amazing considering the red torrent that we were facing in the market. Okay, so what is this technique with tracking Holly signals moving forward? As you can see down here, I call it Barry's method, giving proper credit to the creator here. And it's pretty easy. So here's what we're going to do. Number one, and you can do this with alert windows or top list windows. I just simply chose alert windows. And if I remove my small borders, you'll be able to see, indeed, these are A windows here. But whether you do this with a top list or an alert window, I don't think it's going to make that big of a difference. So here's what we do. Make sure I'm on the right day today. All right, we're on real time. So these were Holly's trades, all right? These were all the trades today. So to track these moving forward, we would do the following. Number one, we only want to take the ones that ended profitable. And of course, there's a couple of different ways to slice and dice this. You can look at risk on only. In other words, we can come up here to our drop-down menu and say, only show me profitable trades. They all disappear with the exception of this one, because when we select this option, it's looking at which ones finished profitable in risk off mode, all right? So today, only one. Now we can do this. We can just say, all right, I want to take all the ones that finish profitable in risk on mode, all right? And in that case, we have 2, okay? So we would simply put these into a list and connect them to these 2 windows here. Now, first and foremost, let's talk about what we want to see the next day. Now, if they're short plays, which these are, then we would, you know, put them into the list that this window is pointed to, and we would look for continuation. In other words, we want a new low being hit, but since this was a short play from the day before, okay, yeah, there we go. That 0 was escaping my vision. All right, but they have to be below the low of yesterday's low. Okay, so they have to be hitting into a fresh low and be below yesterday's low since it's a short. And then we would just simply pull it up, take a look. If we like the chart, we would hit the trade. On the other side of the fence, if it's a long, it needs to be hitting a high, and it needs to be just above yesterday's high to let us know this thing is still moving in the direction that Holly originally called it. Because a lot of the times these things will move just a little bit on the day of the signal, and then the next day they'll really put a oomph in there. Could be the next day, could be the day after. And how many days back you watch is kind of up to you, all right? But 1 day minimum, you know, today's, to watch today's tomorrow, or maybe you say I'm gonna watch the prior 2 days. So what I've got here, and I'm gonna show you guys the list that I've created. So what you wanna do first is come in the tools, go to symbol list, and just create a couple of lists. I just called mine Holly Shorts, Holly Longs. Now you might notice in the shorts, I've got 19 stocks, and the Holly Longs, there's 61, because coming into the market today, I was watching all of Holly's prior 5 trading days, all of last week, all right? So that's why there's so many stocks in there. Now, of course, to simplify things, you might only want to have the prior day or the past 2 days or the past 3 days. Once again, that's all up to you, all right? But bare minimum, today's we'll watch tomorrow. So I'm going to show you guys how to easily manage these lists. And I wish we had a bigger list today, but hey, this is all we got to work with today. So what I'm going to do first.
Tough market to
Yeah, exactly.
find some follow through.
What I'm going to do first is I'm going to clear these lists out. I'm just going to select everything in here and get rid of it. So now you can see I've got 0 in the Holly shorts. I'm going to select all here, clear them out. Okay, so now both of my lists are empty. So if I want to add these 2 profitable trades, which are both shorts, I can easily do this. I can click here, drag my mouse down, and then all I have to do is right click and say send to symbol list Holly shorts. Okay, boom. Now if we come back in here and look, you can see Holly shorts has those 2 symbols in there. All right. So you don't have to necessarily go in there and manually type all these in. When we do have a more full blotter, you can easily segregate the longs and the shorts, drag and collect the longs that you want, drag and collect the shorts that you want as well. Of course, you want to make sure that they finished either risk on in the money or, and once again, this is just a personal preference, or go to all profitable trades and view the ones that finished in the money in risk off mode. From what I've seen thus far, you just get more, some days risk off will be more, some days risk on will show more stocks, but as long as they were profitable, as long as they made money in risk off or in risk on mode, in my opinion, it's worth putting them in the list to follow on the next day. So, that's it, easy enough. So what I'm gonna do is I'm gonna drop these 2 simple configurations in here, which is simply a new high, plus it has to be above yesterday's high, and a new low, and it has to be below yesterday's low. So start doing this and watch what happens. Each and every day we've been able to glean some really decent trades that have worked quite well, and sometimes these things go for several sessions in a row, depending on the momentum and the volume and so forth and so on. So once again, these are real simple configurations. I'm just going to go ahead and drop them in there, but remember, you have to set up your lists. All right, control, there we go. Holly long window. And then the Holly short window. And just keep in mind, if you're a top list person, you can easily set up a top list for this. You couldn't use new high as an alert, but you could use one of the other filters to say position and range or whatever. And the Holly short. So once again, pretty simple configurations there in the alert window format. Okay. Let's see, Bill, how do you take off list ones past 5 days if your time is 5 days? Well, what first comes to mind is you could easily label each day and put the respective symbols for each day in that list so you don't get confused, because remember, you can point to multiple lists within the alert window or the top list. So, if you had, okay, these are the ones from the 5th, these are the ones from the 4th, you can say only the following list and check off each and every one. And, let's say if you're doing the 3-day cycle, you got 5, 6, and 7, and then the 8th comes around and all you have to do is come over here and uncheck the 5th. So does that make sense, Bill? Just managing a list for each and every day that you can point to. Yeah, makes the most sense to me anyway. So, let's take a look at the prior course. Once again, not the best days to illustrate this, but look at previous trading day. The only one that triggered through my long version today was MTZ. Okay, see, it was the prior here, and then today when it busted above this high right here, it did go on a 50-cent run, which I was still kind of amazed because we were still seeing nothing but red. So there was an opportunity to profit from even a long trade today, even though once you got in the money, hey, you got to manage that risk, whether you took the money or let the trade flat out on you. It was still amazing to see that thing take about a 50, 60-cent run before it capitulated. On the downside, one that was a few days older than Friday was this KTOS, right? And boy, talk about one that just went down all day and finally bounced in the last hour, but this thing was giving it up pretty much most of the day. Now keep in mind, reverting back to what we saw at the beginning of the session, anytime I see compare counts like this, what do you think I'm going to do? I'm going to focus more on the short ticker. On a positive compare count day, I'm going to focus more on the long ticker, just like I would in any of the other windows that I typically trade from. But hopefully, who knows how long the craziness is going to last? Maybe Steve's right. Maybe tomorrow's turnaround Tuesday. Hearing that phrase a lot today from some of my older trading buddies. So we'll have to see what happens. Wouldn't surprise me at all to see a gap up tomorrow. Of course, wouldn't surprise to see it down either. We'll just have to see what happens. So that is the new method for following Holly's signals so that we can continue to capitalize on those. Any questions, just throw them out there. Are you talking about how long would you hold them, Marguerite, or how many days back of Holly data am I choosing to look at, I guess is the question. And while I'm waiting for you to respond to that, we will, for the hold. I guess that would all just depend on what the chart is telling us. Looking to the left on any of the plays is going to help give us a little idea how much room we might have in there before we run into some potential support and resistance. You can see KTOS kind of took a little breather here, but that wouldn't make me feel very confident if I was trying to hold this thing long right here. My eyes are really going to this level back here. So once again, the chart is going to help us determine how many days we might get if something continues to move on a multiple day time horizon. But Steve's a big fan of the day and a half move. Correct me if I'm wrong, Steve.
No,
some people are more 2.5 days, but
anywhere between the bigger the first day move, the more likely it's a day and a half move. You can grind out a good 3 or 4 day move sometimes, but the more extended moves tend to take profits quicker.
Exactly. Okay, so as with any market, we did have a couple of decent range breaks today, but boy, whether it was to the upside or the downside, if you didn't get into these things in the first 30 minutes, everything was too stretched out to the top, too stretched out to the bottom to really make any cool, calculated, methodical entries where the chart pattern is conducive. But there were, of course, there was one long that identified that worked actually quite well. And then, of course, today, even though we were just red, timing wasn't exactly there. Everything that you pulled up that was hitting a low looked really stretched out. Couldn't take any reasonable risk, but there were a few, and I'll give a quick overview of those. So let's just start with the one long that I did like today, and that was from the Turbo Breaks Up regular version, and that was in our friend Work here. So as I was talking about, if you didn't get them in the first 30 minutes or slightly thereafter, there was just too much stretchy in most of these things. One of the ones that did work, no pun intended, was Work. All right, so what do we have here? 1, 2, 3, 4, 5, 6, right about nice 30-minute opening range break. Looking at these 5-minute candles here, we get a new high with that volume cranking nicely. How do we assess our risk if we're making an entry in this 5-minute candle here? We look back at the prior 15-minute low, which is the bottom of this middle candle here. So this was our risk, all right? So we got a nice push through, we got a nice reverse back down, not knowing if it's gonna work, but that's what our stop is for. So if we stuck with this one, we get a little sideways action around the entry line, which is, whether it's a Holly trade or one of our manual trades, this is not out of the blue, ebbing and flowing around that entry line. Of course, this one did catch a little traction. It was under the 10 period here, finally managed to get above it, and then got a nice push here, whoosh, all the way back down to break even. So, staring at this one in the face of what was happening, hey, it's the same old song and dance, whether it's this kind of trade or whether it's a Holly trade. Once we get up here, 29.60 roughly speaking, up to 30, we're up about 55 cents or so, market's coming down, get below that 10 period again. Hey, nothing wrong with taking money up here, or whether we peeled off of half of our position and said, you know what, we're gonna revert back to a break-even stop. Would have barely hung in there by a hair, only to see this thing just rocket. I mean, as far as the stock going up today, look at the risk level here, look at the reward area that you got. Of course, this is the anomaly. Most everything else was going with the market. But if you were able to hang in this one, then once it did take its second run, even had a small opportunity to leverage the long position here, beef it up a little bit as the second range break occurs. And after this one, it was just off to the races. Even one more third opportunity up here, but I don't think anybody's really going to be that aggressive on a day like today on a long. So work did work, and it worked rather nicely. How did we finish? Which, by the way, is slack. Didn't even really put out that much volume today. Only finished maybe 25% less of normal. Usually kicks out about 12 million, not even 6 million today. Needless to say, the other ones are all going to be shorts. Let's see, right at the 30-minute mark, we did have a nice got giddy up to the downside. And I like this one a lot because we had just a nice tame range here. We got that range being broken right here. About 25 minutes in, 5, 10, 15, nice tiny risk area, never even got back up there before we just get a little sideways action, and this thing just marched down like a good soldier most of the day. Little buyers taking a break here, opportunities to even add more to the position with these nice little levels here. And then after this last one, boom, capitulated on down like a good short should. So once again, a very small risk area and a very big reward area. And of course, most everything was going down, but it's all about the timing. Is this the pattern that we're looking for? Yes. And they were a little bit more difficult to find today. So a really nice one in Giddy. Not so bad one in Disney today. A little bit more of a stretched out opening range. We got the top up here, the bottom down here, but slowly tightens up here, makes its way down, makes that push through. Disney did finish with a little bit more volume today, but hey, that was kind of par for the course on any stock today. Most stocks that I looked at today were doing well over 1 on the relative volume side. Hey, what do we got here? Just like in Giddy, or not Giddy, but we were looking at work earlier. Made a nice run to the upside, then all the way back down to break even, right? Look here, we're like, oh yeah, we got it with the market going down. Nice profits here, all the way back up to that break even line, just hugging it like a sock before we get the bigger move of the day. This was characteristic of a lot of stocks today. A lot of stocks did this. Hey, Joy, back up to flat, maybe even panic out, only to see them go all the way back down and set new lows. But nonetheless, hard stop up here keeps us in. Take your pick when you're going to get out, all right? But some decent action from Disney today. Nice small risk area, nice much bigger reward area in Disney as well. And then lastly, rounding it up here, a really nice setup in Clack. All right, KLA 10 core, weak, capitulation down. Get this little, this one right here, wasn't so interested in. The volume really picked up right here. There was no volume signal back here. Took a little bit of time for the volume to kick in, but we got this nice little 5, 10, 15, 20-minute consolidation right here. And then we get that break. So this one worked nicely too. Break even stop would have kept us in this one. Hard stop up here. nice small risk area, nice big reward area. So even though everything was going down pretty much, the timing on these things, man, it was anything but easy. You really had to hunt and hunt and hunt to find ones that met your concise pattern where the risk was in place as well. Which, you know, when I see Holly thinking the same thing with a statistical model, that reiterates, that helps emphasize, well, if Holly's only spit out 5-6 trades today, that also helped me control my urge to trade, control my urge just to get into something because everything's going down when we all know it wasn't quite so easy today. So, you know, even in a market like this, we still have to adhere to our patterns. Just because the market is melting down or melting up doesn't really give us a good excuse to break rules, right? Even though we want to justify it like that, just a little psychology 101 here, because I had a little bit of that FOMO this morning too, but that's what it is, fear of missing out, right? And the old adage goes, missed money is much better than lost money in any market. All right, let's see if I forgot anything here. Of course, the no resistance and the no support versions were non-productive today. I actually thought for a moment that ALLK might be one of the ones that actually went up today, and it was working for a little while here. We can see it took a long time. These are 5-minute candles, and then we got the break here. And for a while there, it was up nicely, about 3 points or so. But look at the risk area right here. This risk area, it was like, let's see, roughly 69, 70 down to 6. You know, you almost had to risk 4 points in ALLK to make 3, which really wasn't a good risk to reward ratio. I thought Tyson was going to tighten up here for a little bit because a lot of the times these food stocks and sundries and stuff do better in a, you know, a down market. But we can see here, we had a break. If you didn't take it quickly, you know, the risk was too great. So, you know, from the turbo up family, no resistance, turbo down, no support, everything was just too stretched out coming through those guys, and just didn't have a whole lot of confidence in it. Those are more for trending markets, which we might be trending one way, we might be trending the next. We'll just have to see how the rest of this week plays out. All right, ladies and gents, that gets us up to the 5-minute mark here. Want to thank everybody for popping in here, especially after a long day in front of the screens on a day like today. So, Scott, if you're ready to walk us out and tell everybody about the upcoming test drive and how they can save a little bit of do-re-mi, we're ready for you.
Sounds good. We have a test drive starting next Monday, so make sure you reserve your spot. Get ready. Could just go to trade-ideas.com/test drive to learn more and get your test drive pass. It's going to be $8.99 for 5 full days of all of Trade Ideas Premium and some special educational webinars that we're having during the days. So it's going to be a good time for you to try it out. If you're not sure if you want premium or if you want Trade Ideas, it is the best way to try it without any kind of obligation other than that week. So make sure you sign up. We have a new ebook series that's out. Both Steve and Jamie contributed chapters to this. So do check it out. It's free. Trade-ideas.com/setup is the page to go to. Just put in your email address to get the download links. And they're arranged by topic. So there's 2 chapters per book. One on swing trading, one on active investing for passive investors, and one on range breaks and pullbacks. They've also got strategies you can download from them as well. We have a podcast that we put out weekly. The last couple of weeks we put out some from the archives that are really good interviews, so do check those out. Just search for Trade Ideas Podcast wherever you listen to them, and then you'll be ready to catch the next one and the next new one. We've got a new code this month for discount. If you're ready to sign up for Trade Ideas and save 15% off the first month or year, just use the code HEATWAVE, all caps, like you see it on your screen. That'll save you 15% off your first month or year of Trade Ideas. You can also use this to upgrade from standard to premium. So keep that in mind if you decide to do an upgrade. If you have any questions, just email us at info@trade-ideas.com. That goes into our help desk software, so it's the best way to ask us questions. You can also follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We've also got at Trade Ideas. And Trade Ideas Pro on Facebook is where to find us there, so you can share what we post with your friends. Thanks, everyone. We'll have the recording up later on tonight or tomorrow. Have a good one.
Thanks, everybody. Steve,
See you
Scott,
tomorrow.
we'll see you tomorrow. Bye-bye.